So, from relief to now reform.
Right now, lawmakers are debating the president's tax reform plan. Republicans are planning to pass it in the House. They're hoping to do that by Thanksgiving and then have it on the president's desk by the end of this year. The first critical step comes on Thursday with a budget vote.
Said by completing this budget, that is one big step closer toward historic tax reform, which means we're one big step closer toward a pay raise for middle-income families, for hardworking taxpayers.
5-minute vote.
But not everybody is in favor of the new plan. Democrats say it just won't work.
This plan is a disaster for America. It's no wonder our Republican colleagues want to rush it through in the dark of night, because the more it's exposed to sunlight, the more rotten it smells.
All right, so the big question, if it does pass, how will it impact your bottom line? And joining us this morning to help answer some questions is certified financial planner and CPA Gary Abely. Great to see you, Gary. Thanks for being here with us.
Great to be here.
All right, so let's talk first about sort of the overall premise behind this. A lot of people are calling this the trickle-down effect, some equating it to what Ronald Reagan tried to do in the 1980s. What are your thoughts?
Well, certainly lowering taxes on the wealthy, who will get the lion's share of this, will spur the economy short term. The question really remains, as some are saying, this will add $1.5 trillion to our deficit over the next 10 years. Others might say, well, we'll have such great economic growth during this time that we really won't add to the deficit. The economic growth will help overcome, and will raise more taxes just in volume.
So the president's talking about how that middle-class families will see a bonus of about, what, $1,400, I think is the number that I heard. Is that not accurate, or what are your thoughts there?
Well, of course, the devil is in the details. We don't have enough details to where we can calculate each individual family. For example, they'll be removing personal exemptions, and so if you had a really large family, let's say, not many of these around anymore, but let's say like my wife's family, there were 6 siblings, that would equate to 8 personal exemptions, or a total of about $32,000 of lost deductions today. So in a large family, it could actually hurt them. Now, to kind of counter that, they're proposing to raise, actually double the standard deduction up to $24,000 for married filing joint, which will really eliminate the need for most people to have to itemize.
So, Gary, I'm going to fill out my tax forms, you know, come February or whenever I get around to it. Am I going to notice a difference? How quickly will all of this happen? Will it be easier? Because they keep talking about this will simplify. What do they mean when they say simplify?
Well, they're moving from 7 tax rates down to 3, possibly 4. That 4th one would come in, they actually moving to a 12%, a 25%, and a 35% bracket, away from brackets that range on the low side, 10% currently, all the way up to just about 40% on the high side. So yes, that's simpler. Does it make it easier to file your tax return just because we have less rates? Not really, because most people use tax software today that do the number crunching.
Yeah.
So, but for most middle-income folks, they will see a tax decrease because of the increase in the standard deduction, and also because of the lowering of the tax rates.
All
but
right.
Calculating the exact numbers, well, that remains to be seen.
Yeah, it sounds like we're all going to have to wait and see, basically. Yep. Gary, thank you so much. Always great to have you here. How can our viewers find you if they have more questions?
They can find us at financialgroup.com.
All right. Good to see you, Gary. Thanks for being here.